Hi everyone, my name is Kaustubh Kale. I am a chartered accountant and CFA who helps my clients with all investments and insurances. So whenever you invest in any product, any investment vehicle, understand there might be three risks that you have to analyze. The first risk is called as temporary volatility. So whenever you enter the product, check if there is any temporary volatility. Okay. For example, stocks, mutual funds, gold, real estate might have short term में उतार चढ़ाव, means they might have short term volatility. Hence we call it as temporary volatility, where the prices change frequently and in short term it can go up down, or rather it can also go in a loss. Correct? This is temporary volatility. Point 2 is permanent loss of capital. So check if the instrument that you are investing in, is there a chance that you might permanently lose your capital, whether a part of it or whether the entire portion of it. Check if there is a case where you might lose your capital completely permanently. Okay, so for example, option buy. Now if you buy options, there is a chance you might end up with permanent loss of capital. If you invest in a stock which then commits certain fraud, company commits certain fraud, there is a chance that you might end up in permanent loss of capital. If you invest in a stock again in a company which then goes bankrupt, again that might be a case where you might lose your capital permanently. So these are certain examples to understand. So the first risk was risk of temporary volatility. The second risk was risk of permanent loss of capital. Now coming to the third risk. The third risk is opportunity cost, or there is a chance that there are other products where you could have invested, and because you invested in a certain product, your probability of achieving goals goes down. So basically point 3 is opportunity cost, probability that you may not achieve your financial goals. So whenever we invest in any product, understand or try to compare whether if there is any better product available where you can invest and achieve your financial goals in a much better fashion. So these were three risks: temporary volatility, permanent loss of capital, and opportunity cost, where the probability of you achieving your financial goal reduces. Now the important point here is temporary volatility may not be in your control. Say for example, you invest in real estate, you invest in good quality direct stocks, or you invest in equity mutual funds. The short term volatility is not in your control. Don't be too much focused on it. Okay, what you should be rather focused on is point 2 and point 3, risk 2 and risk 3, where is it that you are entering an instrument which might end up in permanent loss of capital, or are you foregoing opportunities where your probability of achieving your financial goals reduces? So as an investor, your focus should be on point 2 and point 3, avoid permanent loss of capital and avoid instruments where you may not achieve your financial goals. Don't focus on temporary volatility, because eventually in certain assets your value will eventually go up only in the long term. Short term there can be volatility. So hope you have found this useful as well as interesting. Thank you.